Welcome back. Our Central Bank of Nigeria today held a private meeting with a new board and management of SKYE Bank today. This is the first formal meeting since the announcement of the new board was made on Monday. Now, the new team has the sole responsibility of ensuring the speedy restoration of the health of SKYE Bank and ensure that the fortunes of the bank are restored in the shortest possible time. The CBN had taken the decision in view of the persistent failure of SKYE Bank to meet minimum thresholds in critical prudential and adequacy ratios, which has culminated in the bank's permanent presence at the CBN lending window. In the meantime, of course, the new management of SKYE Bank is also at the Nigerian Stock Exchange to address the market on the status of the bank. We're actually keeping a tab on that, and our business correspondent, Temple Ashaju, is actually there monitoring that event. Well, a research analyst at Exotix Partners London recently released a report on Nigerian consumer companies with the theme, full year 2016, the most challenging year yet. Look out for the FX losses on the payable account. Now let's get an insight on what this report is all about. The author of this report and the head of the West Africa Research Exotix Partners, Esili Egbe, joins me now. Good afternoon, Esili. Thank you for joining us. Right. Now, your report noted that in the past 15 years, as 2016 is likely going to be a challenging year for Nigerian consumer companies. On what basis, have you come up with this conclusion?
Yeah, I mean, like I said the last time I was on this program, I think that the devaluation of the Naira has become a very, very significant downside risk. In the first instance, you already had a significant devaluation in the last couple of weeks. That itself is translated into significantly higher input costs for the Nigerian consumer companies, which are very dependent on imported raw materials. At least about 50% of their inputs are imported. So naturally what you'd expect is that that would translate into an increase in input. Remember, of course, that consumer spending has remained relatively slow given the relatively weak macroeconomic background. Now, on top of that, and as we highlighted in the note, you do need to look out for the FX losses. I'm saying that because what happened through the cycle of the challenges sourced in FX was that a number of the multinationals built up a significant amount of accounts payables with their sister or parent companies. Now, the implications of that is, having built up so much over the last 2 quarters, following an immediate devaluation of the Naira, you're required to mark that position because they are dollar denominated to Naira, and so in fact you're going to have significant losses. We've already provided in our models somewhere to the tune of between 27 to 50 billion Naira in charges, FX-related loss charges for consumer companies as a group.
Now, in all of these, is it all gloomy?
No, it's not. I'll say that obviously on the face of it, it's a clearly negative one, but I think that on the upside, we're seeing some industry consolidation. And what I mean by that is a lot of the dominant major players, because they were able to get credit from their parent companies or sister companies, they were able to continue supplying the market with produce. And now that allowed them to gain market share in areas where some of the weaker fringe players were unable to do so because they found it more difficult sourcing FX or just weren't able to operate given the multiple challenges that they were confronted with. So I do expect that you're going to see some accelerated growth in the top line, particularly coming from volumes, as these companies are able or continue to grow market share and as consumption begins to also recover. In addition to that, because you have also consolidated your share, it gives you some headroom to raise prices. So price increases are going to be more accelerated than we've seen in recent years. You remember that the last couple of years have been quite challenging for the same players because there was quite a surge in the competitive landscape. But that has obviously eased now because of the multitude of challenges that has come with the tough macroeconomic environment.
All right, Esili, just hold your thoughts there. Well, I'm meant to understand that our business correspondent there at the Nigerian Stock Exchange monitoring the activities there is ready to talk to us. Good afternoon, Temple.
Good afternoon, Chimezie.
So tell me, what's happening there? The SKYE Bank new management, they're having a meeting with the operators there. What are they saying?
Mr. Tokumbo Abiru just spoke to the traders on the trading floor, as well as Alaji MK Ahmad, about their vision for SKYE Bank. And I just ended an interview with the MD as well, and they made me understand that this new constitution of the new board is actually not a takeover. It is an intervention by the CBN, and they want the shareholders, depositors, as well as investors in any form in SKYE Bank to be so assured that, look, this is a new dawn. This is a new dawn for their investment, and that, look, they are here to turn things around with their wealth of experience.
All right, thank you very much, Tempo. Just keep an eye on that and keep updating us on the developments there. Tempo Ashaju, Channels Television Business Correspondent. Well, we go back to our guest. Well, we are discussing the Nigerian consumer companies. Now, in your report, of course, you did mention, or rather, you are advising investors who probably would want to invest into Nigerian consumer companies to actually buy into the relatively resilient players.
Yeah.
Who are these?
These are the Nigerian breweries. You have also Nestle Nigeria. But I think I want to add some context to that. So what we're saying essentially is, given, I guess, the negative, view we have on sort of the macroeconomic environment, we're underweight Nigerian consumer companies. In other words, we're not buyers. We're recommending that our clients or investors, potential investors, stay away from Nigerian consumer companies. We prefer East African brewers, and that is because the macroeconomic environment there is a lot more favorable. The companies are seeing relatively positive earnings growth, and that has obviously been driven by volumes. Now, what we're saying is that if you must buy or hold Nigerian consumer companies, we think that you want to hold the most resilient players. Nigerian breweries stands out significantly. Why? Because first, it's one of the least exposed to imported raw materials. It imports only 15% of its inputs. Secondly, it's got significant operating leverage to more than cover its fixed costs. So it's such a big company that this kind of shocks, do not necessarily derail the potential for growth. So we're not saying that this company doesn't experience a decline in earnings, but I'm saying it would be much less than its peers. If you're willing to take more risk, we would basically be recommending names like UACN. UACN has got relatively limited exposure to FX. We think that some of the initiatives that management is currently deploying to the business will continue to turn or improve the lot of the business. And so I think we'll sort of keep it at probably those two. Nestle at the moment, if you're looking medium term, could be an interesting play, but I think that the short term, 2016, will be very challenging for Nestle. We're estimating somewhere to the tune of 30% decline year on year, because unfortunately the company has built up such a massive payables that it now needs to reflect as FX losses in its P&L.
Now, you reversed your rating on Guinness Nigeria to hold.
Yeah.
Why?
We think that the company has underperformed significantly. It hasn't met expectations over the last couple of quarters. And we think it's likely that its earnings remains relatively weak over the short term. Now, I think that at the same time, the company still has relatively strong prospects. The opportunity for growth in the Nigerian beer market sector is still very strong. I think that it just hasn't been able to cope because of its portfolio, which at the moment is still highly skewed to sort of the premium segment of the market. I think there's a lot of time for Guinness to broaden that mix, diversify, and basically grow the business as consumption begins to recover. In there as well is what we argue is some sort of M&A, potential. We think that the stock is very low at this stage. It trades around $86 per hectoliters. So that is pretty much its EV to capacity, which for me it's a measure of the value of the capacity of the business. And so at those levels, we're basically suggesting that there's opportunity for either a third-party private equity firm or its parent company to acquire more of the company's shares.
All right, thank you very much, Asili. Thank you for your thought. Well, that was Asili Egbe. He is the West Africa Research, the head of West Africa Research Exotix Partners. We'll take a quick break now. We'll be back shortly.